So you've got this Chinese EV manufacturer that's been grinding it out for years, bleeding money like pretty much every EV startup does. But suddenly, and I mean suddenly, the pieces are falling into place in a way that's making even the skeptics sit up and take notice. It's like watching someone solve a Rubik's Cube after fumbling with it for hours, and then boom, the last few moves just flow together perfectly. So here's what's wild about NIO right now. They're launching this new ES8 SUV on August 21st. Well, technically it's a showcase event in Beijing time, with the actual market launch happening at NIO Day 2025 next month, and the exact date for that hasn't even been announced yet, which is kind of typical for how these Chinese automakers do things, keeping everyone on their toes. But what gets me is how they're positioning this thing. It's not just another electric SUV, which, let's be honest, the market is absolutely flooded with at this point. I mean, seriously, every time I turn around, there's another company announcing their revolutionary electric crossover that looks exactly like every other electric crossover. No, NIO's going full-size premium flagship territory. And you know what? That's actually brilliant when you think about it. See, everyone and their mother is making mid-size electric crossovers right now. Tesla Model Y, BMW iX3, Mercedes EQC, Audi e-tron, Jaguar I-Pace, Volvo XC40 Recharge, Genesis GV70 electrified. I could go on for another 5 minutes just listing them. They're all fighting in that same sandbox, trying to grab the same customer who wants something practical but not too big, sporty but not too aggressive, premium but not too expensive. It's exhausting just watching them all compete. But NIO's basically saying, screw it, we're going bigger. The new ES8 is supposedly significantly larger and more spacious than its predecessor, which actually, wait, let me clarify something here. When I say predecessor, I'm talking about the original ES8 that's been around since 2018. Yeah, they're keeping the same name but completely reimagining the vehicle. It's kind of like when Apple releases a new iPhone but keeps calling it iPhone. Same brand recognition, totally different beast under the hood. Or maybe more like when Porsche completely redesigned the 911 but kept calling it the 911 because why mess with a good thing? What I'm trying to say is this isn't just a refresh where they changed the headlights and called it a day. It's a complete overhaul targeting that lucrative premium full-size SUV segment where margins are typically much, much better, and margins matter, especially when you're still not profitable. The full-size luxury SUV market is where the real money is. Just look at what Range Rover charges for their vehicles, or what people pay for a Cadillac Escalade or a Mercedes GLS. These are $80,000, $90,000, sometimes $100,000 plus vehicles, and people happily pay it because they want that combination of space, luxury, and presence that you just can't get in a smaller vehicle. Speaking of profitability, the analyst community is suddenly getting way more bullish on NIO. Morgan Stanley just raised their target to 6.50, and they specifically mentioned something that caught my attention. They cut their operating expense estimate for 2025 by 10%. That's huge. You don't just randomly slash OPEX estimates unless you're seeing real, tangible efficiency improvements. I've been watching this space for years, and analysts are usually pretty conservative about cost reductions because companies have this nasty habit of promising efficiency gains and then somehow spending even more money. But a 10% reduction? That suggests Morgan Stanley's analysts have been digging into the numbers and seeing actual structural changes. They mentioned restructuring efforts and staff reductions, which, yeah, nobody likes to hear about layoffs, but from a pure business perspective, it shows NIO is serious about getting to profitability. And it's not just Morgan Stanley either. JPMorgan bumped their target from 4.1 to 4.8, which triggered a nice little pop in the market reaction. Deutsche Bank is apparently expecting a potential doubling to 9.00, driven by solid sales of existing and new models. Now, I'm always skeptical when I see these kinds of projections because analysts have a tendency to get carried away, but when multiple firms are independently coming to similar conclusions, you gotta pay attention. But here's what's fascinating about these upgrades. They're not based on some pie-in-the-sky projections about NIO dominating the world or Tesla suddenly disappearing. They're actually grounded in the restructuring restructuring efforts and the momentum from their new Onvo brand, which has been showing 40% plus growth rates. I remember when companies like Tesla went through similar phases. Everyone was obsessed with when they'd turn profitable. Analysts were all over the map with their predictions, and then boom, once they showed they could actually control costs while scaling production, everything changed almost overnight. The narrative went from can they survive to how big can they get in like 2 quarters. NIO's kind of at that inflection point now. They're talking about doubling their 2023 production numbers, which was around 165,000 units. So we're looking at potentially 330,000 plus vehicles in 2025, maybe even pushing toward that 443,940 target they've apparently set internally, though honestly that seems aggressive to me. That would require averaging 55,000 deliveries per month for the rest of the year, and their recent numbers have been more in the 20,000 to 25,000 range. But even if they hit 350,000 or 400,000, that's not small potatoes anymore. That's real volume. That's economies of scale starting to kick in. That's fixed costs being spread across enough units that suddenly your margins start looking a lot healthier. Looking at the broader context here, and this is something I think a lot of people miss when they just focus on the quarterly numbers, NIO is building an ecosystem, not just selling cars. The battery swap network, the BAS model, the lifestyle brand positioning with NIO houses, which are basically luxury clubhouses for owners, the software services. It's all part of creating switching costs and brand loyalty that goes way beyond just making a good electric car. Because let's be real, making a good electric car isn't that hard anymore. The technology has been largely figured out. Motors, batteries, inverters, you can basically buy all this stuff off the shelf. Even traditional automakers who were completely clueless about EVs 5 years ago are now pumping out decent electric vehicles. So you can't just compete on having a good EV anymore. You need something else. Tesla has the supercharger network and autopilot. Rivian has the adventure lifestyle brand. Lucid has fantastic technology, but they're struggling to find their thing, which is actually a cautionary tale. And NIO has this whole ecosystem play that's actually pretty sophisticated when you break it down. Once you're in the NIO system with a battery subscription, using their swap stations, maybe participating in their vehicle upgrade programs, it becomes really sticky. You're not just buying a car, you're buying into a system, and that system is expanding. They've got the main NIO brand for premium vehicles, the Onvo sub-brand for more mainstream pricing. Think of it like Toyota and Lexus. And now this Firefly brand they're developing for even more accessible options. They're basically building a full portfolio to capture different market segments while leveraging the same underlying technology and infrastructure. We're potentially heading into a really interesting period for EVs globally. In Europe, those 2035 combustion engine bans are getting closer, and even though there's been some pushback, the direction is clear. China is pushing hard on new energy vehicles as part of their industrial policy. Even in the US, despite all the political back and forth, the infrastructure spending on charging networks is happening, the tax credits are flowing, and consumer acceptance is growing. NIO is positioned right at the intersection of all these trends. They're Chinese, so they have access to that massive domestic market and the supply chain advantages. They're premium, so they can capture the higher margin early adopters. They have unique technology with the battery swap that differentiates them from everyone else, and they're expanding internationally at exactly the right time. Not too early when markets weren't ready, but not too late when competition is already entrenched. The September 2nd earnings report for Q2 2025 is going to be absolutely crucial. Maybe give some concrete guidance on when they'll hit profitability. And I think we're looking at a completely different narrative around this company going forward. Will they become the next Tesla? Probably not. Tesla had first mover advantage and Elon's reality distortion field, but could they become a sustainable, profitable, major player in the global EV market? The next 12 to 18 months are going to be absolutely fascinating to watch. If they can hit that profitability target in 2026 while maintaining growth and successfully launching in these new markets, man, that's going to be something. But even if they stumble a bit, which, let's be honest, every automotive company does. The trajectory is clear. They've figured out their strategy, they've got unique technology, they're controlling costs, and they're expanding methodically rather than just throwing money around hoping something sticks. That's maturity. That's what you want to see from a company that's transitioning from startup to established player. And honestly, after watching so many EV companies flame out or struggle to find their footing, it's kind of refreshing to see one that might actually make it work. And look, this isn't financial advice. Everything I've talked about here is based on our own research and our opinion on where NIO's headed. The EV market is volatile as hell, and there's a million things that could go wrong. So definitely do your own homework before making any investment decisions.